Hi there. Are you overwhelmed about home mortgages? So we are here to break it down for you. And my name is James. I'm a realtor, and here is Ting. She's a mortgage advisor from Change Home Mortgage. So as a first-time home buyer, sometimes we don't know what the process is, and sometimes it's kind of overwhelmed, and we tend to overthink, right, as a first-time home buyer. So what do we need to know as a first-time home buyer?
That's a great question. The first step first, you need to get pre-approved, and then you can go find the house, and then come back to us. We get the loan approved and close the loan, and also in the meantime we do the inspections, appraisals, and you get your key for the house.
Wow, that's a very quick process, but let's break it down.
Sure.
So when people go and they buy a home, right, they're ready, they have their credit score ready, they have their funding ready, and now they're ready to go buy a home. And you said pre-approval letter, right? So what is the difference between a pre-approval letter versus a pre-qualified letter?
Yes, so for the pre-qualification letter is not guaranteed by the lender. Mostly is for a self-reported financial statements that you can just do it online and do an estimated number, see how much you can qualify for a home mortgage. And in the meantime, we do the pre-approval letter that is secured, more like we check all your documentations for the down payment, for assets and credit by the lender before you go out for shop for a home. So we can check based on our guideline and match your documentation.
And you're basically underwriting directly to the bank, right? Yes. Where it's a full underwriting. What type of programs are there out there that like the general first-time home buyer would apply? Like we know we have conventional, HFA, DSCR, non-MQM. Many programs, but what are the most typical programs that most people use?
Yeah, there are a lot of programs. It depends on the client's case by case, but mostly for first-time home buyers will be the conventional loan and jumbo loan. And also we have some non-QM mortgages. It stands for non-qualified mortgage for a lot of people who are 1099 like you guys.
Yeah.
And we can help them to get the pre-approval letter. And also the DSCR for investors. They are buying home for investment purposes. It's a very, very easy process.
Mm. So what is to get the, let's say for example, I go with conventional loans, 30-year down. What is the best credit score that one should retain to get the best interest rate?
Keep it short, is the higher FICO score is, the lower interest rate will be. So basically we would like to see a higher FICO score, but also if we have fair FICO score, it's okay. We can build up FICO score and refinance down the road. Okay,
so let's say someone who has a better credit score, what do they need to do to bring up their credit score?
They can pay their bill on time.
Okay.
And keep using their credit cards paid off every month. And also don't apply like multiple credit cards at the same time. Purchase a car before purchase a house, because it's not in the same category. When you purchase a house, a car loan and credit cards, and you pull the credit at the same time, it may drop the FICO score pretty fast.
And what type of documents usually do first-time home buyer needs?
It also depends on the different loan programs.
Okay.
But typically, for example, if we do a regular conventional loan for first-time home buyers, we basically check driver's license, IDs, right, and also visa Some clients have green card holders and H-1Bs. We can do it the same rate with U.S. citizens, IDs, visas, and second is documentation for the down payment, your bank account. Most lenders will check 2 months, or the stock or 401k, and that's the second set. And the third one will be the employment or W-2 for 2 years, 2-year tax returns, and also 30 days pay stub. And some people may have different source of income. They need to check all the paperwork, but it really case by case.
Yeah. And also, I heard that you can also use gift, right, as a form of down payment. Yes. So explain that. What do they mean when they say gift?
Yes, so for especially first-time home buyers, when they purchase a house, sometimes their parent or family will give them gifts towards the down payment. So we can use that as down payment, and we will guide the client how to do it. And also, just a tip, if the client's putting more than 20% down payment, 100% can be gifted. But it's not going to be, it's not acceptable for investment properties.
Usually, like, what is how many days generally do you close a loan from the day that you submit the application to the day that the loan doc is out? What is?
I love the question because one of my niche is close fast. Normally, a regular bank, because we're a mortgage company, a regular bank it takes about 25 days. Yeah. We can close within 14 days.
Yeah, because last time you told me that you can close in like 14, 15 days. That's pretty fast, though. So that's, you know, that's considering everything is smooth, okay?
Because seller likes fast closing. A lot of time the seller, they are in their transaction to purchase another home and they need the buyer's down payment as their down payment. So it's close faster will definitely help to get a strong offer, get higher chance to get the offer.
Yeah, and if you're a cash buyer, that's 10 days, right? What else do first-time home buyer need to be aware of?
Yes, I think so. It's better to get prepared, right? Get the pre-approval. Again, find the good lender and also
a good realtor.
Yes, good realtor, and work as a team. Communication is very important. Number one. Number two, don't get a car loan or don't get new credit cards. Don't close your credit cards and just maintain the higher FICO score. That will help you get pre-approval and easier to get closed and smoother. Number three, don't change your job if you don't have to. That's very important. And normally we require 2-year history, but it's not for all the programs. Sometimes buyer change, like example, change from W-2 to 1099, then maybe it will hurt the loan down the road.
But if, let's say, if you work just for a year, you only have a full-time job for a year, and you jump to a new job, as long as that job is similar to what you had before, it should be okay. Unless you're going from a realtor to, you know, an engineer, then it kind of restarts again, right? The 2-year requirement, you know. But most importantly, I think, you know, like talking about mortgages, I know the rates between the lenders aren't that much different. What you should be concerned of is a great lender that's looking after your interests, a lender that's follow up, that's always on top of things, providing the best and only the best services, right? Sure. And that's where you avoid problems. Right, and not the 0.01 or 0.1% differences, you know.
Yes, definitely, and also continue the conversation with on not to do after the employment. So don't transfer money around. That's very important as well. We check 2 months bank statement, and that's very
Just keep your money intact, and it's only your money. And if there's any other people money, always let your lender knows before you deposit that. Right? And if you like, you know, what we discussed, and you like, you know, our video, please show a like, show a thumbs up, so both of us can do more video for you, and we would love to help, and
Yes.
we would love to answer any question if you need.
Yes. Thank you.
Well,
Thank you
thank
for
you.
watching. See you next